Hi friends, welcome to A to Z Learning channel. Today in this video, we will help you understand the financial performance of top 5 technology companies in India. These are HCL Technology, Infosys, Wipro, TCS and Tech Mahindra. These companies, you would agree, have over the years given fantastic returns to its shareholders. They have been also known as best employers by most people who are in the working population. This video will have an easy to follow comparison of these 5 companies across key financial performance parameters. We're also going to spend some time towards the end of the video to talk about their valuation so that you get to understand whether these companies are still good investment or have now become expensive. If you're looking to invest in these IT companies or you have already invested in these, then you cannot miss this video. Yes, I repeat, you cannot miss this video. This is the most important video for you to watch. Please stay with us till the end so that you don't miss anything important. So without any further delay, let's commence our video. As I said, in this video, we will cover the major ID companies that are 5 technology companies in India. And first of all, we will note their financial results, the recent financial results, which were for the financial year 2021. And let's take a bird's eye view in terms of where these companies stand. The table has come on your screen. The 5 companies are set out in those 5 columns right at the top: HCL, Infosys, Wipro, TCS, and Tech Mahindra. If I look at the market capitalization of these companies, clearly TCS is the front runner. TCS has got 1.1 million crore of capitalization. They are the biggest technology company in India. In fact, if you put together all other companies, all other major IT companies, their total capitalization would still be probably just about where the TCS is already. If you look at revenue, again, TCS is the front runner here. It's the largest company by revenue, by profit, or by market capitalization. From a revenue perspective, TCS is at 164,000 crore of revenue. If I add the revenue of HCL, Wipro, and Tech Mahindra together, those 3 companies will be equivalent to the revenue generated by TCS. So you can imagine how big the TCS is relative to some of the other major technology companies. I'm not even talking about the mid-tier, the small size IT companies. So even amongst the major companies, 3 major companies put together will bring the revenue that TCS on its own bring. So that's a big thing. Same way, if you look at the profit even better. If you add the profits of HCL, Wipro, and Tech Mahindra all put together, it is still less than what TCS bring on its own. TCS brings roughly about 32,500 crore every year, and that was their revenue last year. Whereas HCL, Wipro, and Tech Mahindra put together bring only about 25,000 crores. So still TCS will be roughly 7,000 crore more than these 3 companies put together. So the reason I'm stressing on these numbers and trying to kind of bring out that how big the TCS is, how big the kind of company, how well company has done over the years, whether it's revenue, whether it's profit, whether it's market capitalization. So you can imagine their reach. And in terms of headcount also, TCS is the um, far ahead of all other major IT companies. And similarly, if you look at the operating margin, which is like how efficient these companies are in terms of generating margins for their shareholders, for their employees. So these, when you kind of compare across all these companies, again, TCS is ahead of all other IT major. TCS is roughly 28% operating margin, whereas second best Infosys is just about 27%, so a percentage point lower. But when you look at HCL, Wipro, and Tech Mahindra, HCL and Wipro are just about 21%, whereas Tech Mahindra is further behind, 16% only. So you can see that TCS is like a big elephant, which is also running very fast, which is also generating huge amount of revenue and margins for its shareholders. But I think I would also draw your attention when you look at the investment decision for the future. Clearly, the bigger you get, harder it is for you to kind of continue to grow at the rate at which you have grown in the past. Small company can grow faster because they have a lower base to improve upon. Whereas as you get bigger and bigger, it gets harder and harder for you to grow. You become a mammoth organization, decisions take longer to take, deliveries take longer to take place. And this is where you would always find that the bigger companies, the growth rate will be lower than some of the smaller companies. So when I look at last 3 years CAGR rate in terms of revenue growth for the IT companies, I found that TCS has grown only about 15%. I'm saying only about 15%. I think any company will take 15% annual growth rate over a long period of 3 years with open arms. There are many companies which are struggling to grow at that rate. But technology companies have grown really fast. So we've become used to seeing 20% or around 20% growth rate. And on that parameter, HCL is the only company which has grown more than 20% in the recent past. Again, the size kind of helps them. They are just about a quarter of a million crore market capitalization company and about 75,000 crore revenue company, but they're still growing at 22%, which is again amazing. Infosys, 100,000 crore company, still growing almost at about 20%. Very, very commendable job Infosys has done over the years. TCS is not bad, but I would say when you have to kind of pick the best amongst the best, then HCL takes the front stop in terms of revenue growth. Similarly, net profit growth also, HCL is again the market leader, about 13% growth, but TCS is not behind. TCS is second best in spite of their size. They are growing at 12%, which is just a percentage point lower than HCL. Whereas revenue wise, TCS, profit wise, TCS is 3 times bigger than HCL, but growing just 1% shy of HCL. So overall, I think I would say from a summary perspective, I would say TCS remains the front runner. They have given the growth, they have given the scale of revenue and profitability, and from a market capitalization perspective, it is very clear that investor, shareholder is very much interested in TCS stock, and they've never disappointed their shareholders. But same is true for Infosys. Same is true for uh, Infosys. Infosys has also delivered great result, but TCS being the largest and almost 2 times bigger than Infosys has also given amazing results. So overall, I would say that TCS remains kind of a favorite here. But if you're looking at a future growth potential where your delta, where your return on investment could be much higher, then I would always back a high growth rate company. And on high growth parameter, HCL comes winner as per the recent results. So don't ignore HCL either. So TCS, HCL becomes the sort of kind of top choices. Having said that, Infosys, Wipro, and Tech Mahindra have also not disappointed their investors. So it's a hard choice. It's a good problem. But if you have the money to invest in only one or two company, then perhaps TCS and HCL are more of a front runner choice for you compared to some of the other companies. But now let's look at the second part of the story. The second part of the story is more around valuation. So let's see how the valuation look when you look at the key metrics of valuation for these 5 companies. For valuation, I'm picking up the 4 metrics: EPS, earning per share, return on equity, price over book ratio, book value ratio, and price over earning per share ratio. So if I look at EPS, TCS by far the highest, 86 rupees per share earning potential. Amazing, amazing number. But HCL is Infosys are also and Tech Mahindra are also between 40 to 50 rupees. Wipro is a bit low here. Wipro has got a well diversified consolidated business. Return on equity wise, again TCS is the front runner. Price over book and price over EPS, Tech Mahindra comes the first, but probably there is a reason. Their price is not very high because their growth is low, their revenue potential is low, their profitability growth is low, and therefore their price hasn't really kind of gone up. If price doesn't go up, and you're earning kind of, even if it is moving gradually, the ratio wise, Tech Mahindra would look like as if they are the great valuation wise, it's a great company to invest. But I would say I would be more in favor of companies like TCS, Infosys, and HCL as compared to Wipro and Tech Mahindra, looking at the valuation. So overall, I think in a summary wise, having seen the financial results of 21, TCS, though the front runner, still has got a lot more potential, lot more strong numbers to suggest that they'll continue to do well in the future too. HCL, Infosys are again very, very close competitors to TCS in terms of investment option. So at the day end, the question, the million dollar question is that, okay, what do you do as an investor? I think I'll answer that question in maybe two, three ways. First of all, what can you do? You need to be very, very clear what is your portfolio objective. If you're already exposed and invested in the technology stock in your portfolio, then you need to think about diversifying. You can't keep all your eggs, all your investment in one particular sector, even if they are the great company. It's always good to diversify. So you must kind of remind yourself what is the sort of exposure you have in the technology sector? What is your overall portfolio diversification? And if the answer there is that yes, you could do with a little bit more investment in the technology sector, then you should invest in this sector. How to kind of buy shares? Say you have the opportunity to invest in one or two companies. As I said, based on this data and valuation, TCS, Infosys, HCL look really, really strong players. But don't just kind of write the check in one go and invest tomorrow. No. Look for the dips in the market. Look for some correction in the stock prices of these companies and then gradually accumulate. So if you're looking to invest 10,000 rupees, maybe invest 5,000 first and then 5,000 later on. If you have 100,000, 1 lakh to invest, maybe do in 5 installment of 20,000 each, so that you have the benefit of accumulating more shares. And every time there is a dip, buy more shares, because buying on dip gives you great buying price, great purchase price. And when the stock goes up, then you have got different value shares to book more profits. So I hope this simple, very, very short video on the 5 major IT companies in India has been helpful to you. If you like the content of this video, then please press the like button. If you have any comments or suggestion on this video, the way we have kind of put together the content, the way we have tried to kind of help you with the information around these IT companies, and if any suggestion, then please do let us know through the comments. We would look forward to your suggestion. And last but not least, if you've not subscribed our channel A to Z Learning as yet, then why are you waiting? What are you waiting for? Just join, just subscribe our channel and become part of our viewers family. Become part of this passion with which we are trying to kind of take the mantle of saying that yes, we need to simplify the world of financial world. So come join us. Be part of A to Z Learning channel. Subscribe it. Thank you so much.